Limited period offer at bhimagold.com. Enjoy 0% making charges available exclusively at.
Good morning, Reema. From the down 20% for the year, but they are down 40-50% from their highs in 24-25. And that clearly provides a great opportunity for long-term investors because we've already been waiting for valuations to correct, some margin of safety, improving risk return profile, and we have a lot of it over there. Coming specifically to Kalyan Jewellers, I think the kind of pledges which the management has to create has spooked the market, but very positive on the jewelry industry per se. And the Kalyan Jewellers, Titans, Senco Gold, Tangamil, I think all reported very good pre-quarter sales figures. And now the numbers also coming through are pretty decent. But we have this company called Sky Gold, which is a play on the entire jewelry sector because although they are not a B2C player, they're a B2B supplier for a lot of the jewelry chains. And that is one company which is on our radar, which is a great play on the jewelry industry and reasonable valuations and fantastic growth dynamics.
Okay, all right. Hi, Dipan. Good morning. Good to see you in. Dr. Reddy's, that was the other good set of numbers. Ekta told us that the numbers are quite upbeat. Your view on the stock?
Yeah, I think that pharma may certainly surprise us. First, rupee depreciation clearly benefits the sector as a whole, and they've been quietly going about trying to diversify their revenues. I think you've seen Dr. Reddy's case, the non-US revenues have come through excellently, be it in Europe, rest of the world, and India. Of course, they have done well, and the strategic investment which they made in this new business, NRT business, that also is paying off pretty well. And then we have this positive news on supply of semaglutide. I hope I got the name right. And that could be a good growth avenue for the company. So, I mean, very positive on pharma. Dr. Reddy also earnings, P multiple also very reasonable at a discount to its long-term average. So, and great balance sheet shape also. So, very positive and could lead to sustained returns over the next few quarters also.
Dipan, I request you to stay on. Need to slip into a mandatory break. We'll come back, continue our conversation, and we'll also connect with Mithil Kotecha of Barclays to talk about the fall seen in the Indian rupees and a few technical trading ideas coming up with our experts. Welcome back. This morning we may, rebound from yesterday's losses The Nifty yesterday closed with a cut of about 75 odd points. We already saw a 250-point recovery intraday yesterday, but today the GIFT Nifty is suggesting a start of 150 points. But the other burning issue for the markets has been the fall in rupee, and yesterday we went down to levels of 91.7. Persistent selling seen by the FIs. Mithil Kotecha, head of Forex and Emerging Macro Strategy Asia Barclays, is now joining in on the phone line. Mithil, first just explain what happened yesterday, because the fall was a little idiosyncratic when you compare it to what happened with the rest of the emerging market currencies. So what did we see yesterday that transpired?
Yep. Hi. Thanks for having me on the call. Look, I think yesterday was broadly just a number of factors. I mean, as you said, it's very idiosyncratic, but it seemed as if the dollar demand, the pent-up dollar demand had intensified to a point where it really just forced dollar INR much sharply higher. We didn't see so much resistance to this move, obviously, and hence the sharp move higher. But I think it's a number of factors. The equity outflows that have been continuing, and this year so far, even in Jan, we've seen sort of over $3 billion, around $3.4 billion of FPI outflows on the equity front. And while bond inflows have been more constructive, it's certainly not enough to compensate for this. At the same time, there does seem to be ongoing importer dollar demand, which also is driving dollar rupee higher. And of course, as well, maturities of NDFs adding to some of that pressure as well. So it seems a combination of factors, and markets still sentiment towards the rupee still seems relatively downbeat due to these factors. And
there was
the lack of a trade deal not helping either.
Yeah. Mithul, yesterday there was a RBI fix as well, which was you referred to a pent-up dollar demand, but that was well known, right? And I think there is one today as well.
Yes, I mean, that's right. So I think that it was well known, but clearly, for whatever reason, it still ended up seeing, and we've been seeing this demand for dollars at the fix. It's been fairly strong, and it's been happening regularly. So it shouldn't have been. Yes, there should not have been any different. But clearly, as we've seen since around middle of a week or so, last week or so, demand has intensified for dollars, and there's no obvious reason apart from the factors that we know about. So nothing particularly changed on that front yesterday to suddenly warrant this big spike higher. But again, I think, as I said, it is just a combination of factors that seem to be weighing. The other thing that perhaps is the case that the momentum drivers and momentum investors in the market, so-called CTAs, are the speculation that they have also been intensifying their long dollar INR positions, switching from short positions, which perhaps has added some more impetus to the move higher.
Well, 91.80 is the next dollar resistance, right, Mithul? Around there. And I think maybe...
look, I mean, I think obviously 91.80 will be...
This is the quickest way to go from AI beginner to AI fluent in 2026. Watch this.
So this is how I became the most dangerous person in the room. One habit changed everything. I replaced social media with micro-learning. Now, instead of wasting time on social media, I spend 15 minutes a day actually learning how to use AI for writing, planning, brainstorming, the real work. That's it, just one skill a day. This is the 28-day AI challenge built for beginners over 40. Starts tomorrow. Tap the screen to join us and try the one habit that really makes you unstoppable.
Machine learning engineering is a popular choice in today's career landscape. But where do you start? From designing a machine learning system to deploying them in a scalable manner, this session dives deep into what skills are needed to becoming a machine learning engineer. Understand how real-world ML projects are built, scaled, and maintained. If ML intrigues you, register now.
there is definitely an ability to stem this move. And one thing also to bear in mind, this isn't the type of rupee pressures that we've seen historically. This is not because of a balance of payments crisis or anything like that. These are much more controllable. I mean, India's balance of payments still look in reasonable shape despite the outflow from equity markets.
100%.
Yeah.
And just 30 seconds, Mitul, any chatter for today? What should we expect? What's the buzz?
No, I mean, look, I think obviously the broader global chatter has been the fact that we're not now seeing tariffs on Europe, and the fact that there is not going to be any force use, as we heard from President Trump yesterday, and that probably calms some of the market nervousness, and that could also help Asia to some extent, although the dollar has rebounded a little bit. So I think we have to watch a broader dollar tone to give some direction today.
Okay, and the dollar is up for the first time in 5 days. Actually, incredibly, the dollar index has been lower, even as it's been going up against the rupee. So that's the other thing, right? Mitul, thank you very much for joining us. Good speaking with you. Deepan is with us. There's 5 minutes to go for the pre-open session. Maybe slip in a quick question to Deepan. Deepan, thanks for waiting. You heard Mitul there. I mean, we'll see what happens on the currency. And we've got a discussion coming up on Eternal as well. Just, Deepan, your thoughts on, yesterday, for example, names like ICICI Bank, Tata Consumer, some of these you own, right? Bharat Electronics. So I was also thinking of the budget, absolute zero noise. We had Sunil Singhania yesterday. He said, well, it's a good thing the zero noise, because then maybe there can be some surprise, hopefully on the positive side. But one thing everyone agrees, the few discussions around the budget we've had, defense spending will see a big boost, right? So in that circle of defense companies, any thoughts there, Deepan, for viewers?
Prashant, in my 35 years in the market, I've never seen such low level of enthusiasm or excitement around a budget, which is fine because it signals stability. But more than defense, I think that the government may look at giving some benefits to exporters. They certainly need those kind of incentives. And then there's this PLI scheme where a lot of the schemes are having a kind of a sunset clause. So I think that rather than defense, which is a known sector and the investments are known over there, allocation is known over there, something out of the box which the government can do is focus on export-oriented businesses or import substitution. And the last time a major boost was given was in 2020 when the PLI scheme was announced. So I think that would be something which could surprise the street.
Okay. So import substitution as a theme, right? Electronics and... Yeah. And by the way, defense is a big import substitution theme as well. Deepan, thank you very much. Good speaking with you. Appreciate it very much. 3 minutes to go for the pre-open session. We're back in just a bit. So our technical trading ideas on the other side. We also have the discussion with Jignanshu of Bernstein on Eternal. Stay tuned.
Well, pre-opens almost started out there. We'll get the rates in just a bit. For the time being, just to recap, the GIFT 50 suggesting a bazooka opening of around 150 to around 200 points. And the hope is we end somewhere in that vicinity with some gains. That said, let's get into Sudarshan Sukhani, proprietor Technical Trends, and Mitesh Thakkar, President Retail Research at Bonanza Portfolio. Good morning, gentlemen. Hopefully the start is in the green and well in the green. But what do you do from there if you get a gap up of 150, 200 points? Do you chase the opening? Do you just stay away? Or is it a shorting opportunity? Mitesh, you go first.
Morning. So 150 point opening will mean it opened around 25,300, which is yesterday's high. And for me, I think what is also important level, which I've highlighted many times, is 25,400. So I think if we don't see good follow through and if we see supply pressure around 25,400, I think we'll add on to our short exposure. So we have some index put spreads, and I think those can be added. Only if we see signals of Nifty getting past 25,400, I think then we would want to at least reverse the short side of exposure in the indices.
Got it. All right. Sudarshan, what about you?
Yeah, good morning. Well, it's a very different view. Yesterday, the market did some very good things. What happened was that we went and made a new low, and then the low was tested. The Tuesday low was tested, made a new low and bounced back. And then that's not just alone. We also have a much more conducive worldwide environment. So I would say that the gap up is an opportunity to go long. Now you can divide your trade into two parts. One is just after a few minutes after the gap and expect a decline.
Metallic and matte. Oh, honey. Metallic and matte. Matter what? That shade is a red flag. Babe, we're not clowns. Just no.
Cut the noise. Own your style with 5 million plus authentic beauty products on Flipkart.
Priya added a hotel to her flight just because it had a floating breakfast. Expedia, made to travel.
For that matter. So yeah, 91.55. I mean, things will develop through the course of the day, but it's a good start at least. Sudarshan, what are your individual trades? You're saying it's a different kind of a day. Today is the day to buy. So what would you buy?
Well, I have two large caps. Hindalco is a buy with a stop under 920, and Reliance is a buy with a stop under 1350. I do have two intraday shorts. BSC sell with a stop above 2680, and Emphasis sell with a stop above 2820. But I would prefer to focus on the buys.
Yeah. Okay. Mitesh, what about you?
Yeah. On the stock side, I have a few buy calls as well. Angel One, I think, was a buy yesterday as well, ended flat if you take out the dividend effect. So remains a buy. I think it's showing positive structure as well as near support. So keep a stop at 24.84. Look for targets of 26.20. Buy on Britannia with a stop at 57.75. And here I would look for targets of 58.70. Canara Bank is trading on its 34-day exponential average. So buy with a stop at 147.5 for targets of 157. And on a mild pullback, HPCL is something which I would take on the negative side. So around 428, 429. Around 434, sell with a stop at 445 and look for a target of 410.
Got that. Big move seen in internal and pre-open, pushing towards the 300 rupee mark, 5% up. Blockbuster performance seen in Q3. Manglam is now joining in to just quickly revise the numbers for us. Manglam?
Well, it is a blockbuster performance that has come by. Ahead of the numbers, the stock was up 5%, and now it's up another 5%. And this, notwithstanding the CEO change that happened as well. Deepinder Goyal has decided to step down as CEO, making way for Albinder Dinsa to run the company on day-to-day operations as Deepinder stays on as vice chairman. The internals, they're strong. We have food delivery, growing at around 16.6% versus street expectations of 12 to 15%. Quick commerce grew 121%. The expectations were 120 to 130%. Adjusted for the GST cuts, the growth has been over 130%. Quick commerce has turned adjusted EBITDA profitable, and food delivery margins at 5.4%, near all-time high. Good performance coming in.
Thank you very much for that. We also have Jignanshu Gore, Director and Senior Research Analyst at Bernstein, to talk more about Eternal and where it's headed from here. Let's talk about the core growth engine, quick commerce. Jignanshu, to begin with. As Manglam said, it's turned adjusted EBITDA positive in Q3. And this is at a time when competitive intensity, the kind of cash balance that we have at peers, is only going up. Can you tell us from here on what is the kind of profitability and growth metrics you're penciling in for Blinkit?
Sure. Thank you for having me. Always a pleasure. So quick commerce growth was sort of expected, but as you said, EBITDA surprised. We feel this EBITDA surprise is not necessarily a one-way trajectory from here. It may remain a little volatile over the next few quarters, which the company also alluded to. So on a growth perspective for FY27, we pencil in roughly 80% growth in the net order value or NOV. And a positive EBITDA at the full F27 level. We do expect some volatility in Q4 and Q1 going ahead, however.
And what is the EBITDA margin for Blinkit in FY27? You said positive.
Yeah, positive. So roughly 0.5 to 0.7% positive on a full year basis.
Got it. What about food delivery? What will their contribution be to the, in terms of the top line, in terms of margins, I mean, the overall profitability, and even to the target price?
Yeah, so food, we have always said that food delivery, I think, is at the peak of its powers, both from performance as well as narrative. It is a steady growth engine. We expect 15 to 17% growth over the next 3 years, with adjusted EBITDA staying close to the same number, which is between 5.2 to 5.5% of NOV. So it remains, in our view, a roughly $10 billion valuation component of the total company. So roughly 30% value, 25 to 27% valuation coming from food delivery. It's a steady business, two-player market, less interesting from story and news perspective.
Jignanshu, hi, morning. Have you been following whether the other players in this industry are trying to outcompete each other with discounts, etc.? Has that started? That was supposed to be kind of a theme. We discussed this last time as well, because everyone has raised money and they would be at it. Is that happening?
Very much so. It's happening across from all the 4 major, let's say, competitors. So we've seen that Swiggy has reduced its pricing or increased its discount, reduced the minimum order value for free delivery. Zepto has done the same. Even Flipkart, Amazon, Reliance are all back into the fray and news. So we see that happening at 2 places. One, it's happening on consumers, giving more discounts and lower minimum order value for, and second, it's happening with brands, where a lot faster onboarding of a lot more brand is happening to set up the portfolio of and increase the choices for the customers. So we expect this to be high over the course of 2026.
So this kind of keeps everyone in check, right, in terms of how much money everyone is able to make. So this, in that sense, this is at least the next two quarters. I mean, that impulse is going to show up in numbers across the board, all 4 players?
I would expect so, Prashant, right? We expect that the growth will be a little challenging or will have to be bought a little, either with discounts or with more advertising. And consumers don't really display a very high amount of loyalty for these instant purchases. So this knife fight, if you will lead to some bleeding across multiple players.
The rejig at the top with Dipinder and Albinder now stepping up. How do you read that, and how are investors and markets going to take it?
See, any leadership transition is always a hotly debated topic. We expect this to be divisive. In our view, it is a net negative in the short to medium term because the industry and the company and the business model is still evolving. It's not necessarily set. Second, in the stock price, there was a lot of what I would call a halo effect with the success that Dipinder had in growing both food delivery as well as quick commerce onto other businesses, right? Where that we will be able to grow district the same way, or maybe hyperpure the same way. So there is some narrative pullback which might happen, but I think given the operational performance, numbers become more important anyways. And given this performance, the stock should do well in our view, and we remain bullish on the stock.
Okay, just one final word. At 300 rupees, what is the valuation of Eternal now, EV to sales, as per FY27, FY28?
At 300 rupees, we don't look at EV to sales.
Okay.
We think it should be reserved for companies which are far ahead in their life cycle than where Eternal is. So we do look at EV to adjusted EBITDA basis. And as per that, our target price is 370 on a roughly 35% EBITDA on FD and a 30% EBITDA on, 30x EBITDA multiple on quick commerce.
Thank you, Jignanshu, for joining in. Great chatting with you as always. Go across now to Sudarshan for his 9:10 call. Sudarshan?
Yeah, well, it's Hindalco. Buy Hindalco with a stop under 910.
Hindalco. Mitesh, yours?
Yeah, I'll go with the buy on Angel One.
Meet Cantabro. He doesn't understand our customers yet, but he heard you guys like data centers. Cantabro, cloud hosting for you, whoever you are.
With Agoda in your hands, your next trip is easy and affordable. Don't wait, see the world for less. Book now.
Now let's find out what the brokerage call of this morning is. Sudarshan is now joining in.
So first one, Nomura has come out with a note on auto segment, especially focusing on the CV players. It says that dealers suggest cement, steel, e-commerce and autos are now driving strong demand. As far as the CV is concerned, it has a buy call on Ashok Leyland and it increases target price to 216 rupees per share. It says it's a pure play beneficial upcycle in domestic M&CV industry, and it's going to be supported by improving freight rates, and second, better fleet operating profitability, and third, lower GST rates, and fourth, aging truck fleet. Also, it maintains buy call on Tata Motors commercial vehicle and increases target price to 552 rupees per share. It says company continues to benefit from its dominant position in domestic CV segment, and M&CV volumes are sustaining momentum. Also, LCV remains resilient. HSBC has come out with a note on Rallis India, has upgraded the stock to buy, and target is rupees 300 per share. It says all the segments have performed well despite challenging conditions, and transformation starting to reflect beyond domestic crop prices to seeds and exports. And upgrade is after a sharp 35% correction that stock has seen in the last few months or last 6 months, and also because of the higher earnings, it has upgraded the stocks.
Okay, all right. Thanks a lot for that, Sudarshan. Well, here's a quick recap of all the stocks we covered earlier this morning. Stocks in focus, Eternal, Dr. Reddy's. Well, both of them will be reacting to their numbers as well as the management change out there. Bank of India. The other stocks in focus include from the metal and the metal-linked names. So you have Jindal Stainless, numbers look quite good out there. Gravita as well, the numbers looked quite good out there. The other stocks in focus include the likes of Canada, HSBC Life Insurance, and Oracle as well. The starting is in the green. And the other stocks in focus are HPCL, PNB, and as well as PNB Housing Finance and KEI Industries. Not too hot today. The markets on the whole are indicating a big gap up. So, guys, nearly a 200-point gap up is what we're working with. Hopefully, we end somewhere in this vicinity.
Yeah, holding on gains, Nigel, right? That becomes important because you can start and then lose steam along the way. I guess I suspect that will happen, but I mean, how you close finally is essentially going to be important, because that will bring some more confidence rather than starting strong and then ending way off those kind of levels. So 25,344 is the start as far as the pre-open session is concerned. Mitesh is still with us, and I think we've got about 2 minutes to go for market open. Mitesh, if there's a rebound which happens, and you've got to consider the alternate view, where will it be? I mean, for example, the strongest sectors are what? Metals. Even the metals index ended high yesterday. PSU banks is the other one. I mean, where would you look for those?
One, I think 25,400 still is the trend deciding on level on the index. And as you rightly said, in case we start getting past that, then you can add metals, public sector banks, which is already what you have mentioned, and some IT names.
Okay, and some IT names. The IT index ended about almost just a little over 1%, little less than 1% lower. So there was that pressure. So it's basically exactly reversing that. Anything coming up on your screen, Mitesh, in the pre-open warrants to look?
Yeah, I think I've not checked the pre-open rates, but I'll just do that once they open because pre-opens are slightly, not the final rates. So let us wait it out.
Yeah, yeah. Okay, well, I think we'll get a decent start and then we'll pick it up from there. Mitesh, thank you for now. Let's just look at a few names, right? I think Eternal, of course, on the Nifty, it's a Nifty stock. It's up almost 5-6%. So that, of course, will be right on the top of Nifty gainers. And then we'll look at a few other names as well. But indices first as always, right? What do we have? 25,350. That's 0.75% higher. The Nifty Bank is up 0.6, 59,140. The small cap index is up about 1.25%, and the mid cap index is up about 1.25% as well. So this is, pretty good stuff across the board as things stand. 1,200 stocks are higher, 450, 480 stocks are lower. So it's about 3:1 in favor of advances at this point in time. Oh boy, look at that. It's a sight for the eyes, right? Eternal, Dr. Reddy's, Tata Motors passenger vehicle business, BEL, but it's all green. Only NTPC in the red. When's the last time we had a screen open like that? I think it's been more than a few days. But yeah, 0.75% higher, and the Nifty starting strong. Rima.
Well, advanced decline ratio, right? 5:1 to begin trade with, so very, very strong. And I think all the sectoral indices are now firmly in the green right now. So that's a positive start. It's a broad-based up move. Top gainers include Eternal, 6.5%, counting up. 300 rupees crossed today. Dr. Reddy's up 3.5%. Both these two are reacting to a very, very strong set of numbers. Other gainers include that in the auto pack. So you've got Tata Motors, passenger vehicles, M&M, Eicher Motors, Maruti Suzuki, all starting off in the green. Adani Enterprises is a big mover. BEL is seeing some buying today. Adani Ports too on the gainers list, 1.3% higher on that. SBI is up. Now you've got one more stock in the red, Nestle, that's down close to about 0.5%. But this is a broad-based, very strong start that we have at our hands. And the mid-cap index is up 1.33 of a percentage point. The small-cap index also up nearly 1%. So it's good to see the broader markets outpace the frontliners in terms of gains.
Well, it's been so long, right, that we've seen a screen like this, big gains on select stocks. And there are actually a couple of very, very good earnings reactions. So I think we should pull up Bajaj Consumer. There was a management change at the top, and that's clearly reflected. Revenue growth of 30%. It's been a while since we saw something like that. Yeah, the profitability as well, there is surge. So Bajaj Consumer is spiked up big time. Bari Energy as well, that stock has seen a big correction from the recent peak. I think the high was around 3,500, came down to around 2,500 odd. But today, a big move out there as well. The numbers look quite good. Stock up close to around 8% as we speak. What else? MRPL. Yesterday, it saw a good run. Remember, those refining margins continue to hold strong. After the big run that we saw yesterday, stocks are seeing some follow-through buying today. Bank of India as well. We'll have the management later on the show who will be joining in. And Eternal has done well. Swiggy, there is some read-through, it seems, for that counter as well. So that's another big gainer in today's trading session. Net, most stocks doing well. However, EPAC Prefab, the management just joined us, on the show. They said that Q3 had various disruptions, and because of that, the revenue had fallen all the way to around 325 crores. However, for Q4, they're seeing a bounce back, and that's why they'll end at around 1,500 crores of revenues for the year. But the street is disappointed, so that's one of the stocks on the losing end. But otherwise, guys, it's been a long time. We saw so much of green on the screen.
Absolutely, and good to see, right? Just a few other names before we bring in our guest. Eternal, of course, we had a discussion on that, 4% higher. There's Vari, which is up about 8.5%, 9%. Vari, by the way, has got huge volumes. It's the number 2 volume-led gainer on the NSE. So 9% there now. Dr. Reddy's, I think we highlighted. Oracle Financial Services. When overall things look a little better, for many stocks, you get a bit of breathing space, right? And you get, where there are shorts, there is a little bit of covering, and people get a little more encouraged to buy what they wanted to buy, but they didn't want to because maybe, they thought overall things are going to go the other way. So you don't want to stand in front of that trend. And that's why, for the market to sustain, this turn higher must be there by close. And, you need a few days of decent price action. MRPL is up about 3.5% as well. Premier Energy is 5%. So both Vari and Premier are coming up with gains. I think Bajaj Consumer we highlighted 9% higher. Tattva Chintan is up 2%. Vikram Solar. So many of these solar companies, right? And they're all up. So 3 we counted, right? Silver and gold. By the way, yesterday the 2 largest volume-led gainers were gold bees and silver bees. And today they are on the other side with large volumes as well. So it's actually, silver, gold, all on the losing side with large.
That's your OOTD. Gen Z or Gen Z? तो बहन, तू मत पहन.
Black loafers, ew.
That bag? Really?
Cut the noise. Own your style with 5 lakh plus fashion trends on Flipkart.
You don't need a second job. You just need to know these AI tools.
So this is how I became the most dangerous person in the room. One habit changed everything. I replaced social media with micro-learning. Now, instead of wasting time on social media, I spend 15 minutes a day actually learning how to use AI for writing, planning, brainstorming, the real work. That's it, just 1 skill a day. This is the 28-day AI challenge built for beginners over 40. Starts tomorrow. Tap the screen to join us and try the one habit that really makes you unstoppable.
Which is happening, but I mean they've been short-lived for now, right? You get these once in a while, but otherwise the trajectory, at least for the last year and a month now, has been up and up. So that's the overall broader picture. Harold van der Linde is with us in our studios to take us through what he's making of things. Harold, great to have you with us here.
Good to see you. Live now this time.
I think first conversation in 26, we've spoken, no, not this year, right?
We haven't spoken this year yet.
I think there's still time to wish you a happy 2026.
Yeah, Happy New Year, that's right. Yes, thank you very much, yes.
So it's been tough, right, Harold?
Yes.
Especially for India.
For India, it has remained tough, right? There was a bit of attention to India early Q4, I think it was, late last year, and India performed very good, and then suddenly that dwindled a little bit again. And I don't think that's too much to do with India, to be extremely frank. It's got more to do with Taiwan and Korea. The AI story is still doing very well. Order flow is good. Chinese exports are very strong. That is the build-out of data centers in the US, so people need servers, chips, cooling systems, you name it. And they are made by the Taiwanese in China or the Koreans. So the momentum is in these markets, and we've seen people shifting back there. And that meant, the attention left India for the moment, yes.
So you upgraded India, I think, towards the end of last year
right,
to an
yes.
overweight, and you believe that at some point this AI trade is looking a little crowded in markets like Taiwan, Korea, and therefore India will come back in favor and FIs will return.
Yes.
Well, that's not played out. So now when you speak to investors, both domestic investors, you're here in India, so outline your agenda for us. Domestic investors, foreign investors, I mean, what is the view now towards India?
I think actually the story is still the same, and I don't get that much pushback on this particular story. I had a round table last week, and we asked people for ideas. India came up, but I got the feeling that people don't want to play it yet because that momentum is still there, and things have looked a little bit better. So your valuations look a little bit better. Your earnings growth is starting to turn around, or at least a bit of earnings upgrade starting to come through. But so the story is actually improved a little bit. But if you then look at the order numbers and the sort of earnings upgrades that we see coming through of companies like TSMC and Hynix, they're really good. And you're right, people, I mean, they struggle to buy more almost. They have full exposure there.
Harold, good to see you in the studio, Harold. Yeah. What's worrying the FIs most? You know, the last few conversations we've had with you, you've been also telling us maybe in 2026 they make their way back. Now the valuations have corrected themselves to some extent. Hopefully earnings do come back as well. The other problem is, I think, on the currency front, where we're seeing the rupee slip. Out of these points, what is it that's worrying the FIs to come back home? Because they're underweight. The holding is at the lowest levels ever. What's the key important factor? Or are the other markets still too good to ignore?
I think the other markets for the moment are too good to ignore, and that's where the momentum is. And I know people who are somewhat uncomfortable with it, but they think, this might go on for a couple of months. And if the performance is there, and you leave too early these markets, well, then your boss will say, hey, why you're underperforming? Why did you sell so early, right? So they're playing the momentum. But I think, broadly speaking, there are 3 risks that come up for India. The first risk is currency. Yeah, and that's just a fact of life we have to deal with. And you can deal with that if you invest here by having companies that export and that give you sort of currency hedge. The second risk is what happens with the earnings in the near term. So we see earnings recovering, but is that really true? What's coming through? Is this sustainable? What sort of earnings are we going to see this year? The feeling was that, the feeling is last year we had just below 10%, 7-8% or something earnings growth. Next year, people working the assumption is going to be 11, 12, 13, something like that. And then a third risk, and that is, again, it's not a major risk factor, and it's a bit of a longer-term risk. I think India could do what we've seen in Indonesia. Indonesia, very profitable market 15 years ago. Margins very high. Companies make a lot of money, good cash flows. What then happened is that you had a new president coming in, Jokowi was his name, and he says, I want to build out infrastructure. So he invested in railways, roads, harbors, bridges, you name it. That meant that access into the market was really good. That comes at a time when e-commerce, you can see the analogies here with India. E-commerce is building out, so a lot of companies say, hey, we can do the distribution for you. And we've seen Chinese, Korean, Thai companies coming in. Competition intensifies, margins go down. So you get, although you had decent economic growth, you get earnings growth that is going to be slower. And my suspicion in India is that this could happen in the longer term as well. It's not really a risk, it's just a fact of life, but it's something that we need to understand as well.
Harold, the union budget is a big deal in India.
Yeah, it's a very big deal.
Everyone starts by saying, oh, the budget doesn't matter anymore. And then, when the budget is presented, it does matter.
Yes.
You found out.
Yes.
So what's your
it seems almost like it's a celebration here, the budget. It's so much attention goes into it.
And we're celebrating on Sunday.
You're saying Sunday? Sunday. Oh, so you'll be here on Sundays working on it.
You can join us.
Yeah, I can join you. That's a good idea. I'll come back for it. Yeah. No, but the budget is really big. And I think sometimes too much attention is being paid to it. But it does show the direction of what the government wants to take, right? And of course, that creates a lot of excitement. All the analysts have to figure out what that means for their companies, and that's why it's such a big thing. There is something happening elsewhere in the region that we have to be cognizant about as well. Indonesia is going through a very similar sort of story as India at the moment. They've cut interest rates, they've done fiscal stimulus, the economy is starting to recover. It's a bit behind where India is, and the earnings might start to recover this year as well. Very much an Indian sort of story, right? But they've run almost to the limits of their budget. And now the markets are getting worried, are they going to break that? So they have a self-imposed 3% limit. They're at 2.8, 2.9 now. So they can't really do that much more. And the feeling is, what if they break it? Now, that's an Indonesian story, nothing to do with India. But if they would break it, people are going to say, where else in emerging markets could this happen as well? And then India would flare up. And I think actually your fiscal position is good, but yeah.
It's actually, some would say it's too good. And it doesn't need to be so good in that sense.
Yeah, so you're in a very different
As someone said, I think CIO of a large mutual fund here in India, said, well, why does it, at HDFC mutual fund, he said, why does it have to be such a holy grail, right? Why can't we spend a little bit more? Because it's been very, very disciplined about it for the last 10, 12 years, right?
Yeah.
So, but if there is requirement and there is tax shortfall, why not try and borrow a little bit more?
Yeah.
I mean, if you can, and expand the deficit.
Yeah, the problem is, of course, I actually would agree with that. And a lot of countries need more investments, and the government needs to lead that. Indonesia is one, India is another one. The problem is that we're living in a world now where a lot of actually developed markets, economies, they're overextending. So we now see worries about the fiscal position in the US. Bond yields went up earlier this week again. In the UK, in Japan, it's becoming a worry. The funny thing is, in the emerging markets, the feeling it is pretty good. So, but it could be that markets are getting a little bit sensitive to this particular issue. But I do agree, India could probably spend a little bit more and do more.
My only point is, with all the fiscal discipline, I mean, the rupee is at 92.
Yeah.
Right?
Yeah. Yeah, no, that's right, yes. Well, there's a consequence, right? There's only two things you can do with growth. Either you spend more, that's a fiscal expansion, or you cut your interest rates. Now, if you don't do fiscal expansion, you're going to cut your interest rates. This is what happens here, and that doesn't help your currency. But that's just the way it is. The really way to counter this is to get money in. A big investment boom. For that, you need to open up industries, make it easy to invest. You need to.
Limited period offer at BhimaGold.com. Enjoy 0% making charges available exclusively at BhimaGold.com. TNC apply.
Young developers can't clearly differentiate between data science, machine learning, and artificial intelligence. Early on in my career, it was a bit confusing for me too. But to pursue a career in any field, you have to be familiar with the roles and profiles in that field. Join our free masterclass and gain a deep understanding of data science, machine learning, and artificial intelligence. And learn the skills most relevant to your career path. Click the link below to register.
So you have now almost $1 trillion is being invested in data centers and AI, and we're going to spend maybe another $1 trillion. This will come with problems, I believe, at some point in time. I don't know if you're paying for AI, but the vast majority of people that I know, they're using AI apps, but they're not paying for it. And if they pay, it's $20. Microsoft, I think they're making about $1 billion out of AI now, but they said earlier this week, listen, people need to adopt this because we're making a lot of investments as an industry. But that's a different ballgame altogether. The thing is, but building it out, you see these earnings upgrades coming through from TSMC, in Hynix, in Samsung, and they have enormous operational leverage. So big fixed costs, a bit more sales, and your margins expand. So you have strong earnings growth. We're talking about 30, 40, 50%, very high. That will moderate, but the earnings are still being upgraded, and that's where the attraction is, and that's people don't want to leave that. The story in China is a bit different. It's actually the Chinese that are buying Chinese stocks, not foreigners. So the foreigners are not going back to China. They're just going to Korea and Taiwan. It's the locals in China that have basically sitting on an enormous cash pile, $23 trillion US. It's just the cash in the banks by Chinese households, and they haven't done anything with it. And there's a lot of it they won't touch because it's their pension, but maybe $6 trillion they might start to allocate into property or to stocks or crypto or gold, whatever you can do. It seeps out as well into Hong Kong. So that's driving the Chinese market to a certain extent. So I think the Chinese market is a different story. It's really Taiwan, Korea, and the earnings are still being upgraded. And we're talking about very strong earnings numbers there.
Since you briefly mentioned gold, let's talk about that as well. You know, in gold here in India, it's a very, very important asset because we have 35,000 tons of gold with, households. And of just putting in the numbers, the value of gold households that households hold is now, more than what the entire equity market is, which is unusual in comparison to the remainder of the globe. Because if you look at Germany, Italy, that's in the vicinity of 25 to around 40% approximately, at most. What's the view on this asset class? From an India perspective, it's actually creating that wealth effect. But as an asset, what's your take? As of yesterday, that 35,000 tons of gold is more than $5 trillion, while the equity market is around $4.5 trillion.
So for a lot of Indian ladies, it must have been a really happy new year, seeing their jewelry being repriced. We're living in a different world. Geopolitics is changing. Central banks understand that, and particularly emerging market central banks. They are worried that at some point in time, I mean, some of them have actually told this to me, that they might get cut off from dollar exposure. Let's say there is a crisis at some point in time, for whatever reason, doesn't matter. You need dollars. In the past, you could go and say, can we swap this by other central banks or the Fed? But what if that doesn't happen? So you see central banks say we need to build our own financial resilience in this sort of new geopolitical world that we're creating or is unfolding. And we need to make sure that we have not only dollar exposure, but other currencies as well. But there's only so many Australian dollars you can buy and yen you can buy. So, and of course gold. So they're buying gold. But central bankers, don't think about making profit. They just need exposure. So you got an asset where there's not a lot of supply coming up. Supply is fixed. There's only, you know, that there's only 2 swimming pools of gold in the whole world. You put it all together, it's not a lot. So supply is fixed. Demand from the central bank is good. And that just creates an upward drift. And that's what we've seen. It's happened actually some couple of years ago already. But so we think there's further upside.
There's further upside for gold even from here on. Let's wind this conversation down, Ren, but the top themes that you like here in India. You know, in the past, you had a little bit of cement, discretionary staples as well in the pack. You know, give us the top 2 themes that you'll have here in the Indian markets.
I think the top theme for me remain, I always like actually the domestic sort of story in India. I like stuff like, for example, hospitals. They're a bit pricey to be extremely at the moment. If I would look at the stocks that we would be focusing on, it would be some of the auto company, discretionary spending, some of the jewelry companies. I think
Mahindra is something that you'll have liked. Trent is something that you'll have liked.
Yeah, there's a couple of these kind of jewelry companies. There's one with Kalyasha, I think it's got. I forgot. Anyway, it doesn't matter.
The jewelry company.
Yeah, jewelry, retailers, auto. We like the banks, not expensive. And if earnings and credit growth improves, that should be pretty good. So there's a few of these sort of domestic names, but if you come in as a foreign investor and you want a little bit of, you're worried about the currency, you buy some IT or something like that to hedge that out.
Absolutely. Thanks very much, Harold. Appreciate you joining us. Really, thank you for dropping by. And see you on Sunday.
See you on Sunday, exactly. Good luck on Sunday. Yeah.
Okay, well, that is the conversation as far as Harold is concerned, as far as the market view goes. Well, KEI Industries is the next guest on the program. So stocks, I think, a bit under pressure. Mixed set in the third quarter. Revenue growth has missed expectations, but do note that export business has gone up substantially. We are joined by Anil Gupta, CMD at KEI, to take the conversation forward. Mr. Gupta, great to have you with us here. Good morning. Thanks very much for joining us, Prashant, this side. And I think, happy 2026 to you as well, sir. I think first interaction this year, and I hope this is a big one. Mr. Gupta, it has been a big one so far for copper prices, right? And I think all eyes on what that is doing. I mean, you and I have spoken about this before, and how maybe at some level, at some price, as you've put it, this will start to impact demand. Are we at that level, sir? Because in terms of pricing, it is a pass-through. But in terms of volumes, is it having a demand effect? Sorry.
Good morning. I really don't know how it is going to impact the demand of copper products, copper cables, in view of these high prices. But in fact, in last 9 months, our consumption of copper has gone up as compared to aluminium. It may be because of the exports, because in exports, major cables are procured with copper conductor. But, definitely I could see that especially in power cables, there may be some shift of demand from copper to aluminium in near future.
Sorry, could you give us, Mr. Gupta, the volume growth in wires and cables this quarter?
In this quarter, our volume growth is close to around 10%, and even more, around 11%. And our copper consumption has grown by around 19%.
Copper consumption, that is by value?
No, by volume.
Okay. So you're saying that purely, if you look at the copper from the wire and cable side, that has grown 19% by volume?
No, only the copper. If I combine aluminium and copper both, then it is around 11%.
Okay.
Because there was a shift from domestic market to export. So the export has grown by around, wires and cable export has grown by 95% in this quarter. And hence copper usage has been more.
Okay. So you are saying there's no impact, right? You're not saying, you started by saying, I don't see how it affects demand.
I have not seen any impact so far, but definitely the way the prices have gone up, there may be some shifting from copper to aluminium, especially in case of power cables.
In case of?
Power cables.
Power cables. Got it.
And so for you, what is the split between copper and aluminium? And if there is a shift, can you tell us by how much? So say the earlier mix was 50-50 and now it's 40-60.
No, our mix is at the moment is around 50-50%, 50% copper and 50% aluminium.
Okay.
But in terms of value, that if we say value of 50% copper will be much, much higher than aluminium. I can't quantify that what kind of shift can it be, because when the shifts take place, it takes a very long time, because converting the technical specifications of products internationally is not so easy, and it is a horizon of around, I can say, 3 to 5 years.
Got that. And there's also the risk about maybe some value-conscious buyers moving towards unbranded because of the kind of pass-through we've had in the overall prices. So just an overall, word on the demand environment. Your top-line growth was at 20%, but it fell short of consensus expectations. How is Q4 going to shape up for you, and what are you likely to end FY26 with? You'd given a guidance of 18%. Do you maintain that, and even on margins?
We are likely to, very likely to close at 90 to 20% growth over full year. We have already commissioned first phase of our Sanand project in mid of December this year. And gradually we'll be ramping up the production in this fourth quarter of this financial year. So I do expect that some contribution coming up from new facility also. But I can maintain that for next 3 to 4 years, we expect to grow by 20% CAGR year after year because of the new capacity coming on board. And we have a strong market, positioning in India as well as world over.
Hi, Mr. Gupta. Good morning. Good to see you in. So you have got new capacity that's coming on stream, but you've got new players as well that are entering the market. The Bidlas, the Adanis. Now, yesterday you had Bajaj that announced as well that they want to enter into this field. Do you think there is enough room for everyone to prosper and do well? Or at some point of time, it's going to have some impact, right? Either profitability gets hit, either the volumes get hit, or is there enough in store for everyone?
In last 1 year, at least 2 or 3 new players have come into the wires market. But
Meet Cantabro. He doesn't understand our customers yet, but he heard you guys like Star Wars. Cantabro, cloud hosting for you, whoever you are.
Find your stay with a Goda. Fly away with a Goda. Have fun every day with a Goda. Travel your way with a Goda.
See the world for less. Book now.
Survive, everyone will do well. And you are giving us your guidance that 20% growth will happen. Mr. Gupta, just a quick question. Yesterday when you all delivered your numbers, you all reported and you said that the cables and wires business grew by 20%. The fear was that maybe you have grown by just 6 to around 8%, very, very roughly, because that was derived by the price hike that we have seen from copper prices. Now it appears that you're saying that 11% is the growth that you've done, 10 to 11%. Yeah. Does that mean that a lot of that input cost pressure has not yet been passed on, and now you'll be looking at the price increases, which in turn will help the top line as well as the profitability in Q4?
See, our volume growth is around 11%.
Yeah.
Why people are driving 6%? They might be considering the prices of January. When we are taking the price increase, we are taking an average of full October to December, vis-a-vis last year October to December. So when we say an average, the average prices from last year to this year in the third quarter has gone up by around 9%.
Okay. And do you think you can sustain this 10-11% volume growth in Q4? And tell us a little bit as we wrap this conversation about exports. That's been the big driver. What kind of growth can we expect from exports? Which are the key markets that are driving this? And what will all this mean for your margins?
The export growth is driven by mainly, our aggressive pitch into various countries, adding the geographies in our business, adding the products, and adding the technical approvals in various countries. And this momentum will continue. I do expect at least 35 to 40% growth in exports next year as well. I always talk conservative because we always aim for much bigger, growth. But when I say so, ultimately our aim is to grow by 20%. Whether we grow from exports or from domestic market, our ultimate aim will be to grow and utilize our capacities in full.
Mr. Gupta, we wish you all the best of luck. You're giving us a sense. Aim is 35-40% next year, but you will do much better. At least that's the aim. And 20% overall growth essentially is what you aspire to. Thank you very much for joining us here on CNBC. Stocks down a little bit, but it's done well. 3.5% down on KEI. We take a break. Tata Communications Management on their earnings and outlook coming up. Stay tuned.
Welcome back. Let's invite Tata Communication. That's the next management on the show now. Q3 revenue growth came in at about 6.5–7%. But if you strip out the Forex move, the top line growth was about 2–2.5%. The company's data and digital portfolio continues to do very well. Digital revenues up nearly 15% on a year-on-year basis. We have with us A.S. Lakshmi Narayan, MD and CEO of Tata Communications. And there's also going to be the succession plan, which has been announced effective April. Amor, thank you very much for joining in. This is Rima here. Just begin first with the broad picture on the kind of demand outlook. Because if we strip out the Forex movement, the company's top line growth was just about 0.5% quarter-on-quarter and year-on-year at 2.2%. Is that a bit muted?
I think one of the aspects that we will draw attention to is out of our overall portfolio, the core connectivity is nearly 50%. And that traditionally, we've said that is growing at a low single-digit numbers. It used to be around 5–6%, but in the last 2 years, it's come to around 2% based on some cable cuts and other impacts that we have had. But the other part of the portfolio is really the digital portfolio. And the digital portfolio has been doing quite well. Now, given all the macro conditions that we see, we do see some tailwinds on the infrastructure modernization driven by AI. We have seen a 15% growth on the digital portfolio. So I would say overall, we are very pleased with the momentum that we are seeing in the business.
So let's talk about the digital portfolio, which is the growth driver for the company. And as you said, the top line went up by 15% on a year-on-year basis. But at the EBITDA level, the digital portfolio is still making a loss. Can you tell us what the EBITDA loss is in Q3 and when will you break even?
Yeah, we are not calling out specifically on the numbers, but in the last IR day, we did say that the overall digital portfolio is making a 9% EBITDA loss. Within the digital portfolio, there are really 4 or 5 major domains. Right? So the network domain, the next generation connectivity, that is doing quite well, both in terms of margins and growth. The cloud and security similarly is doing well. I think the other 3 areas, which is the customer interactions, where we acquired Kalera, the CPaaS, the SMS margins are pretty muted globally. We want to improve those margins through diversifying that from just SMS to other channels like voice and RCS, and also building and bolting on a a full agentic AI, where we've announced an acquisition of Commotion. So that will really bring that margin up. The fourth portfolio around Move and IoT has been a drag on margin. We are sharply focusing on pivoting that business to a new model where we will focus more on the margins and get that right before we emphasize on the growth. And lastly, the media business, the acquisition that we did with Switch and the combined is still making losses for us. We think we'll come to an LOB neutral and EBITDA neutral situation in the next few quarters. So that will help us in the overall journey towards the profitability of the entire digital portfolio.
Any timeline on when the digital portfolio breaks even?
We have said that FY28 is our goal. We want to get to at least the 23%, which is the lower end of the 23 to 25% spectrum that we have given. And we are quite confident of getting there in that time frame.
Okay. So FY28, you get to your stated margins of 23 to 25%, at least the lower end, and the digital portfolio breaks even. Am I getting it correct, sir?
Yes.
Okay. Because there was some fear that you pushed forward your digital portfolio break even by 1 year. So instead of FY28, perhaps it would take place by FY29.
It could happen. There are many moving parts there.
Okay.
It also depending on the mix. So if you see this quarter, our CIS revenues Q on Q has grown 10%, but largely on the back of CPaaS, which is a lower margin business. We are also pushing ahead with a lot of new offerings. So this month end, you will see offerings that will help enterprises to accelerate the journey with the digital infrastructure for AI. There are 3 new product launches that we are doing end of the month, and all those 3 products are SaaS-like products, which will come at a very decent SaaS margins. And it depends on how those take off. We might be able to achieve the margin goals even faster.
Okay, apologies. I'm still trying to pin you down to some numbers and a guidance. And I know there is going to be a new CEO, MD, who takes over in April. Sorry, digital portfolio breaks even FY28 or FY29, or it's uncertain at the moment?
No, we are certain. That's why I said, you pushed me for FY27, whether we would break even. I said FY28. We are confident.
FY28. And will we continue to see a 15% kind of a top line growth in digital portfolio, given the order book, the funnel, etc.?
Certainly. I think we see momentum in the second half of the FY26. We are seeing a greater momentum, and hopefully that will carry on for the 27 and 28 forward.
Okay, seeing greater momentum in the second half of the year. Got that. What will be the contribution of your digital portfolio to the overall data revenues? I think now it's 50%. But as it continues to outpace the other segments, what will that number inch up to?
We have said that it should get to a 60%. That should be the next goal. So when we hit a 28,000 crore mark, our digital portfolio would be at about 60%.
Okay. Did you all consider any acquisitions? Because to get to that aspiration of 28,000 on the data revenue by FY28, people have been pointing out that it's difficult to do so without an acquisition.
Yeah.
So, I mean, did you all analyze any M&A acquisitions this quarter? There was no announcement, but when can we hear one?
This quarter, we announced Commotion acquisition, the AI startup. We are very excited about that capability that we are bolting on. It's a very unique platform that we have acquired. I would say its voice-to-voice model is amongst the best in the world, not just in India. And they've taken a holistic approach for AI with what we call as an AI operating system, which can sit above all the systems of records and engagement that customers would have, and helps customers to deploy agentic AI, voice AI in a very rapid fashion. So that's one acquisition that we already announced. So Rima, to your question on whether we would acquire more, we are constantly on the lookout. But I must add that we are not looking for acquisition purely to meet a number or to add revenues alone. It should be a combination of capability addition and strategic.
Vikram found the perfect package in seconds, so he could spend hours and hours relaxing. Expedia, made to travel.
This is the quickest way to go from AI beginner to AI fluent in 2026. Watch this.
So, this is how I became the most dangerous person in the room. One habit changed everything. I replaced social media with micro-learning. Now, instead of wasting time on social media, I spend 15 minutes a day actually learning how to use AI for writing, planning, brainstorming, the real work. That's it, just one skill a day. This is the 28-day AI challenge built for beginners over 40. Starts tomorrow. Tap the screen to join us and try the one habit that really makes you unstoppable.
And that is really getting launched end of this month again, and there are a few beta customers. So that will be another accelerator for us. And the third is the acquisition that we did last quarter, Commotion. The entire Commotion platform, their voice-to-voice AI model was trained on our Vayu AI cloud, and it will run on Vayu AI cloud. It's capable of running on other clouds as well, but it runs on the Vayu AI cloud. So we will have a full stack capability of the AI cloud, an agentic AI platform, a voice AI, and we will offer the whole stack to the customers. And that will be another avenue for us to monetize what we've invested in.
Okay. Just out of time, what is the monthly revenue from GPU as a service right now?
We haven't called out yet. We will we put all of that in our cloud and security offerings.
But it's doubling on a month-on-month basis.
Month-on-month basis.
It's small, but it's doubling.
Yes. Yeah.
Right. And can you call out the data center revenue? Again, here you're providing the service, the infrastructure. You're not actually building out the data center. But can you provide a number of how much that is contributing?
So, Rima, we only give that as a full segment of cloud and security. That has been growing very well for us. Cloud by itself was somewhat muted. We launched and relaunched the Vayu Cloud after doing a lot of work and with self-serve and capability enhancements. And we see that that will begin to contribute in a more meaningful way in the coming quarters.
Okay, all right. We'll leave it there, sir. Thank you very much. Good luck as you look ahead. I just want to make a quick mention of all the silver ETFs which are down and down sharply. Actually, if you just sort of sort what's down with volumes, the top 10 things are all silver Bs, gold Bs. HDFC Silver, Tata Silver, SBI, all ETFs down very, very sharply across funds. And we'll try and get some perspective on this in terms of, silver prices, of course, the prices themselves have taken a bit of a pause, but nothing, of course, like what we've seen here. So there has been, of course, some anxiety that maybe underlying financial prices have run up far ahead of where, silver prices have been at. So is that the pullback that we're seeing right now, or is there any other dynamic at play? I think that is something we try and get to you as we go forward. We'll try and speak with a fund at one of the many that are on your screen right now. So sharp pullbacks is what you have. Let's stay with the commodity and the metals theme. Jindal Stainless, Nigel, is the next management of the program.
Well, that's right. That stock is surging in trade after reporting an inline set of numbers, but the street is quite optimistic on the way ahead. Volume growth continues despite exports being under pressure. The net debt as well did come down. To help us out with what's the outlook from here on and how was the past quarter, Mr. Tarun Kumar Kulbe, the CEO of Jindal Stainless, joins us on the show. Hi, sir. Good morning, and congratulations on a good showing in a difficult quarter, actually. Let's focus on a couple of aspects because the street wants to know whether Jindal Stainless will upgrade their guidance. Focusing on volumes first, any tweaking in the volume estimates for FY26? You've gone at a good rate in the first 9 months, so I ask you that. And what's the outlook for FY27, given that export contribution has now come down to just 5% of the mix?
Okay, good morning, Nigel. We had given an annual guidance of volume growth 9 to 10%. And this we had done in our calculations, and we believe that we are on course. So at this moment, I would still keep it 9 to 10% because the various product mix we keeps on playing with depending upon the market situation. So for FY26, whatever volume guidance we have provided, we are right now sticking to that, and we believe that we should be meeting that. FY27, because there are so many changes happening, so very soon in the next call when we sit, at that time we'll provide you the guidance for the FY27.
What about exports? Will they go further down from this 5% contribution, or are there signs that things actually are rebounding?
Okay, so on the export front, Nigel, the thing is that the basic problem is of uncertainty. Our two major markets, one is Europe, another is the US. And okay, the rest of the countries also, some of the countries we sell, but these are the two major ones. US, we know the continuous different announcements and all keeps the people confused, keeps the buyers confused. And Europe, the issue was that CBAM is now at the definitive phase. And the issue was that till end of December, the European Commission had not given the threshold limits and the calculation methodology, which they came out towards the end of December. But still, what remain is that who is going to verify these calculation, tax calculation, and the verification method. So these this kind of non-clarity is keeping the customers a bit holding them. But we believe that as soon as the clarity comes, export in any case because we are able to we are selling into the domestic, and always we have said that domestic is our primary market. But export we can again increase. So far as percentage term is concerned, Nigel, we also have to be mindful that our pace is constantly increasing. So even with the similar kind of export tonnage, in terms of percentage, it looks a bit lower. But yes, at the same time, the market complexities are also impacted it. But some kind of improvement can happen going forward.
Okay, all right. The other point is the EBITDA per ton. The last couple of quarters, Mr. Kulbe, I've been asking you, you're saying that it'll be in the vicinity of 19,000 to 21,000 odd. And this quarter as well, if I calculate, you're at around 21,000. Can it get better from here on? I ask you this because nickel prices, going by your presentation, it's cooled off. Ferrochrome, I have my ear to the ground as well. And in the last 3-4 weeks, ferrochrome prices have cooled off. So will that be a bit of a spurt in terms of the EBITDA per ton? And do you want to raise that guidance, maybe the lower end from 19,000 odd?
Okay, so Nigel, on EBITDA per ton, yes, you're right that we had given a guidance of 19,000 to 21,000. But at the same time, our 9 months, if we look at the performance, it is around 21,300. And I believe that the year closing should be closer to this. So a bit, I'll say 21,000, somewhat plus to 21,000. That is what we are estimating. So nickel at the same time is quite fluctuating. I mean, it went down, then again it has gone up. So all this also impacts. But just to provide a guidance, I'll say that we see it, whatever we have done in 9 months, somewhat closer to that, we should be closing the year.
At the upper end of the guidance. Got that. Yeah. What about the CapEx? How much have you spent already? I think earlier you were looking at around 2,700 crores for the year. How much of it has already been spent? And what happens to your net debt number? That as well has come down by around 200 crores in the past quarter.
Yeah. So CapEx, we had provided a guidance of 2,700 crores. And now currently we have already completed around 2,200 crores. And we believe that whatever guidance we have provided, somewhere those numbers will be meeting. And so far as our net debt is concerned, net debt has now come down to 3,451 crores, which was 3,991 at the beginning of the year. We had provided a guidance of 3,500 to 3,700. And now we believe that by the end of the year, we should be either closing at the similar level what we have attained, or maybe slightly lower also could be possible, looking at our performance. And with these numbers, our ratios, our net debt to EBITDA stands around at 0.67 and debt to equity 0.18, which are one of the best in the industry.
Okay, all right. The other point is what happens to your capex in Maharashtra? What's the update, sir? We are at CNBC TV. We'll be happy to visit the plant, and know what's the update of there, because you're talking about very, very large numbers, massive capex. So what are the steps from here on? Do we see the signing? Do we see some work start in the next few months? Give us some timelines.
Okay, so Maharashtra capex definitely, because Maharashtra capex, when we announced, we have also stated, Nigel, that is where our next phase of growth we see in the long-term future, and that is why we intend to build a big capacity over there, because our existing plants are coming to, almost space we have utilized, and strategically also Maharashtra we have selected. So we are working on it, because in India, greenfield, when you go for land acquisition itself is a bit time consuming. So we are working on that. At the same time, we are working on the other aspects of starting any greenfield project. Very soon we will come out with our definitive plan, and soon you will hear from us about the clearer timeline. I think in the next 1 or 2 quarters, we should be coming out with our plan.
So we can fix the date accordingly then, with regard to, post the MOU that's been signed with the Maharashtra government. Mr. Kulbe, you've been with the group, I think, for very, very long. You've seen all the cycles up, down, etc. Some difficult times as well. Now we have the budget that's coming up. And the fairest guys, the steel companies, they put a good pitch and they've got some protection. What about for the stainless steel industry? Tell us, what is the differential between domestic stainless steel pricing and the imports that are coming in there? Because for the last many quarters, you all have been talking about, yes, there is a problem with regard to imports, but I don't see too much movement on ground. But you can update me. Where is the file at? In terms of your request to get some protection.
No, absolutely right, Nigel. On this cheap imports and poor substandard quality imports is something industry has always been complaining about. And in between, through QCO, these substandard exports were put in some check. But then again, government opened it. So we believe that, and there are always, the people also represent about the capacities and availability of material, whereas we have always been saying that in the stainless industry, in the MSME, a lot of capacity remains idle because of this substandard cheap import. So we strongly believe that the government should stop, should put a check on this, and this will help also in promoting the manufacturing or make in India, because that encourages investment, that encourages manufacturers to invest more and even further enhance the capacity. So we have also, industry has also applied for an anti-dumping duty. The investigation is on that, but because that is also a time-consuming thing, in September 25, the investigation have initiated. Normally, it takes around 12 months, so that's what we are expecting, that the government eventually should take a favorable decision to that.
Got that, sir. Thanks a lot for joining in, giving us all of those details. The stock has been a big mover. If I look at it, even from the pre-COVID period, the stock is up 15 times, and in today's trading session, putting on another 3%. Time to slip into a short break. On the other side, we'll get chatting with our technical expert. Stay tuned.
Somil Mehta of Mirae Asset Share Khan is now joining in for a technical check on the markets, going strong, 200 point plus now on the Nifty. Somil, any Nifty Bank trade and your stock calls?
Good morning to everyone. The trend still remains negative here for the short term. In the medium term, the structure has changed a little bit here. On the weekly charts, on the monthly charts, the previous swing lows have broken on the downside. The view remains negative, short term, medium term, both for Bank Nifty and Nifty. Now, the levels to watch out on the downside, targets would be around 24,800 for Nifty, and the reversal on the upside would be 25,600. So I'm not looking for markets to go above 25,600, and sell on rise should be the strategy on the mid caps specifically. Now, I have two trades. I have VBL, which has broken a small consolidation on the daily charts, trading below the averages, below 200 daily moving average. I'll be expecting a sharp correction here. Stop loss would be 491 and target would be 460. The second call would be on Torrent Power. Torrent Power, very similar. A small consolidation has broken on the downside, trading below the short-term averages. Making lower tops, lower bottom. So the stop loss here would be 1350 and target would be 1230.
Okay. Thanks very much, Somal. Appreciate it. That's a short, quick conversation at this point. I mean, the big story, of course, is the sharp fall in all these silver and gold ETFs, which are down, and actually silver more specifically, but even gold lower. And of course, names like Hindustan Zinc. There are only few equities directly related to mining of some of this stuff. Hindustan Zinc, and then there is Hindustan Copper. They're also seeing some pullbacks. We take a break. We are back with the management of Bank of India to break down their third quarter numbers. Stay tuned. Coming up.
Fly Emirates, fly better.
Welcome back. We have a pleasant set of results to handle now. Bank of India's third quarter numbers came in fairly decent. What stood out for me, at least, is that the bank posted a 16 basis point rise in its net interest margins quarter on quarter. That's not easy in a quarter when there was a rate cut in December, remember. So the other things that stood out for me, loan growth at 13.6%, deposit growth a little lower at 11.6%. Well, it looks like loan growth is going a bit too fast, but importantly, they're all within the guidance. The market has given a decent amount of thumbs up. Well, today it's given a thumbs up to all stocks, but Bank of India also gets a thumbs up for these numbers. There it is. A decent 5% gain is not something you often see after the banking results. Remember when ICICI announced its numbers, it was not greeted with such a big thumbs up. So what's going right for Bank of India? To understand that, we are joined by Rajneesh Karnatak, Managing Director and CEO of Bank of India. Good morning, Mr. Karnatak. Thank you very much indeed for your time. I am very impressed, I guess the market is, by the rise in margins. And what is impressive is that there was a rate cut, and even then your cost of funds has, your yield on advances has not fallen. I mean, don't you have EBLR loans linked to the repo? How come your yield on advances did not fall, although there was a rate cut?
Yeah, thank you, Lataji, for having me here, and a very happy new year to you and all the viewers of CNBC. So yes, we have been able to maintain our margins, in fact, improve our NIMs, global NIMs from 2.41% to 2.57%. If you see the data, our yield on advances, as you rightly said, have they are at the same level at September numbers at 7.81, but our cost of deposits we have been able to bring down. So our cost of deposit as on December is now 4.77 only, and the difference between the cost of deposit and yield on advances was 3.04% as on December, which was 2.96% as on September. So we have improved it by 8 basis points. This has helped us improving the net interest margins overall. As your question with respect to specific question with respect to how we have been able to protect our this yield on advances, there I would say that we have done a lot of churning in the corporate advances and low yielding advances, which were AAA advances to PSUs, which were at very low rate in repo. There we have churned them and we have gone for AA advances where the margins were better by 20, 25, 30 basis points. So that has helped us in protecting our yield on advances, and the full impact of the repo cut which happened in the 5th of December has not come for the full quarter. The impact was only for 22 days. The full impact would be coming for the entire system in this quarter, in the Q4 quarter.
Okay. That explains. You said you churned your portfolio in favor of what and against what?
Yeah, that was in favor on the rate of interest only. It was in the EBLR only, the repo rate linked AAA rated borrowers. We shifted towards AA borrowers, where the rate of interest was much better from 25 basis points to 40 basis points.
Fair enough. Okay, I got that. Let me come to the cost of deposits now. That has fallen by 8 basis points. But you know, when I looked at your investor presentation, you are having actually a very big growth in bulk deposits. One would normally think that will push up cost, isn't it? How come you manage lower cost in spite of having higher corporate or bulk deposits?
So just to share with you the data. So if you see the weighted cost of our retail term deposits, it is higher than the weighted cost of the bulk deposits by nearly 14-15 basis points. So in fact, the bulk deposits are cheaper than the retail term deposits. Though retail term deposits have grown by 14% and we are a franchise of around 5,500 branches, we would always be growing our retail term deposit. But to give you a sense, in Q4, the cost of average cost of those deposits was higher than the bulk deposits.
You know, will you run into an LDR problem? Because your deposits are obviously growing a little slower, 2 percentage points slower than your advances. As well, you are already relying on bulk deposits. So do you worry that you may not be able to keep up this pace because of deposits, or at least retail deposits being a problem?
Yeah. So we have a very nuanced approach as far as the LCR and other things are concerned. To just give you a sense, if you see our presentation, our deposit growth in absolute terms has been more than the advances growth. So our deposit have grown by around 92,000 crores and our advances on a YOY basis have grown by around 81,000 crores. So one point is that our credit deposit is growing at a faster pace than the advances, though in percentage terms, the advances is growing higher, but the deposit is growing at a faster pace, number one. Number two, the fact is that even though our CD ratio is at around 82%, our LCR is quite comfortable and well above the benchmark of 100% set by the Reserve Bank of India. That is the second point. Third point is that our this retail term deposits are growing at a healthy 14%, but our bulk deposit, as you rightly said, has inched up to 15%. However, our in the entire domestic deposits, 85% of the domestic deposit constitute retail term deposits and CASA deposits. There also, if I give you a sense, the bulk deposits, there also we are growing quite healthy in the bulk deposits also. And definitely with the credit growth we are having, 15% on the domestic side and global credit deposit of 13%, definitely there will be more requirement of deposits. And with the structural shift which is happening on the deposit, where CASA is not growing for the banking system and more reliance is on the retail term deposit and bulk deposit, definitely there will be some increase in the term deposits for the bank because we have to sustain the growth of the advances which is happening in the system.
Fair point. So how do you expect your margins to trend? Therefore, it looks like we are at the end of the rate cutting cycle, and maybe now your older deposits will start getting repriced also. How do you expect? What is the margins for this quarter, fourth quarter? What is the guidance for FY27?
Yeah, as far as the margins are concerned, so the present margin that we have, we feel that we'll be able to sustain this margin in this quarter. And with the repricing in the term deposit, which is happening quite with pace, we think that the margin should bottom out in the Q4, and after which there should be improvement in margin, provided there is no further repo rate cut.
Okay. Well, there is a small rise in slippages because of that road asset. Can you give us a sense of how the SMA, I mean, I'm trying to read your investor presentation quickly, but anything in the SMA 1, SMA 2 that we should worry about? I think there is a marginal rise in the SMA 2 assets. Is that anything to worry?
Yeah, so there has been a 2 basis point increase in the slippage ratio. That is because of one road asset which has gone into NPA. But overall, I can confidently say that in the Q4, our fresh slippages should be at the same level in the Q3 which have been there. As far as the SMA book is concerned, see, SMA we have been able to reduce 5 crore and above from 6,400 crores to around 5,500 crores. And it is only 0.75% of the overall book. So SMA2 number, if you see more granularly, there are basically majority of the SMA2 is putting in the corporate book, which are 3 PSU accounts, which are there, which have now rolled forward towards the SMA2 category. But we have a state government guarantee over there. Okay. And we are quite hopeful that the slippage will not happen in these accounts. Okay. But as far as the overall SMA is concerned, yes, there is SMA in retail, MSME and agriculture book. But this is a normal SMA, which is there, SMA 012 in the RAM book. And there is not much of a concern over there.
All right. I'll just tell my viewers, we are talking a bit of jargon. SMA2 are loans which have not been paid back even 60 days after the due date. SMA1 are loans that have not paid back 30 days after due date. So SMA2 has gone up slightly. Last quarter for the Bank of India, it went up by 0.29%. In the third quarter, it has gone up by 0.57%. So that's why I asked this question. But thank you, Mr. Karnatak, for that. The other point I wanted to ask you was, what is the sense you're getting in terms of where the best growth will come? And therefore, where will the margins come from?
Yeah, as far as the best growth is concerned, we are targeting, frankly speaking, our RAM credit. That is where the margins are, retail, MSME and agriculture. there is where the margins are number one, and where there is diversification in the portfolio also, and we are able to spread our risk also. So our RAM book is growing at around 18% on a YOY basis. If you see, retail book is growing at around 20% on a YOY, MSME book at 15%, and agriculture book at 16%. So that is where we are targeting. Presently, our composition of advances is that 58% is RAM book and 38% is the corporate advances. In the long term, as a strategy, we want that our RAM book should be at around 65% and the corporate book at around 35%, because that is where we feel the margins will be there going forward.
Okay. You're doing a steady recovery of about 1,000 crores to 1,200 crores. You know, a year ago it was 1,200 crore. Last 2 quarters you've been doing about 1,000 crore. Is there a lot of more recoveries can we expect in Q4 and next year?
Q4, definitely we have a good pipeline for recovery. Nearly 2,000 crore of recovery we should be showing in Q4. Oh. And it would be much better what we have done in the Q3. So if you see the total recovery which has happened in this quarter, Lataji, so it has been around 1,500 crore, which includes the recovery plus the UCI and the URI, which we call the unrealized interest. There also recoveries happen when we do the one-time settlement and other kind of things. So 1,500 crore has been the gross recovery, cash recovery, and it is 1.3% of the fresh slippages. And with around 2,000 crore of recovery, cash recovery we are expecting in this quarter, our number should be even better, considering the fact that we will be able to contain the slippages at the same level.
Oh, that's good to hear. Very quick last question. Has there been any discussion on consolidation? Should we expect some news, budget or later? What have you been told?
No, nothing, no news with us.
No news at all. Okay, ROE, any guidance you can give us? ROE or ROA?
So ROA, we are at 0.96% and we are very close to 1%. We should be touching 1% in the Q4 quarter, but for the annualized ROA, I would say that we should be somewhere around 0.91, 0.92% for FY26. And going forward, yes, for FY27, we are targeting a consistent ROA growth of 1% in the coming quarters.
Okay. All right, we'll leave it at that. So out of time. Thank you very much, Mr. Karnatak, for joining us. The markets have given their verdict, a 5% gain in the stock. The overall markets, after showing a brilliant start, has seen a little bit of profit taking, but that is normal after 1 hour of trading. It looks like we're in for a good day for the bulls at long last. On that positive note, wrap up on Bazaar. Chart Pass is coming.
Silver futures dip sharply on MCX. Silver ETFs take a sharper beating, down anywhere between 10 to 25% on likely liquidation of leveraged positions and low liquidity.
Dr. Reddy's top Nifty gainer after it delivers a beat in the third quarter. India, Europe, emerging markets, all of them lead growth. Margins come in at around 23%. That compares with expectations of around 21%. The management tells CNBC TV18 they expect single-digit growth in the United States, while other markets are expected to grow in double digits. The stock bursting away, up 5%.
PNB Housing languishing in an otherwise strong market. The stock down 7.5% on the back of a weak set of earnings, which missed expectations on most counts. Loan growth comes in much lower than management's guidance. Disbursements, margins too lackluster.
Earnings strength pulls up shares of Bajaj Consumer and Vari Energies. Bajaj Consumer delivers a solid 83% growth in the profits. Record quarterly module production as well as strong order pipeline aids the growth for Vari Energies.
EPAC Prefag downbeat following a 25% sequential dip in revenues in the December quarter, which is seasonally strong. This even as the order book for the company grows over 30%. Management tells CNBC TV18 they expect revenues of around 1,500 crore rupees in FY26. The stock down by 10%.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And it's been so long that we have seen some kind of green on the screen. You know, at least it's in the green, Mangalam. It's come off 100 points on the top, but we'll take the positive. There is some green on the screen. So good
Clutch at the positives, Nigel. It is a positive, and the market breadth is looking a lot better than what it was same time yesterday. Though there was a recovery from yesterday that did not sustain at the highs, and today's opening also hasn't sustained at highs. But the good part is that the market's made a firm base for itself. Those two lines, that tell you the story of the day. From the word go, they have been maintaining that distance between each other. And maybe this train tracks continue in today's trading session as well.
I thought you were going to sing a few lines of the song.
No, Nigel. Maybe if it sustains and goes at goes to the high point of trade, maybe we'll sing
only the first line. After that, it'll be a little issue.
All right, what do? Let's get you some ideas for profit in the meanwhile. Let's get some ideas from our colleagues at Money Control Pro as well. Anubhav Sahu of moneycontrol.com joins in to talk about the stock that he's been tracking. But before we go to Anubhav, the other big Money Control exclusive yesterday of Donald Trump saying to India that maybe there will be a good deal soon has led the markets higher as well. We'll take that. We'll take credit for that as well from our Money Control guys. Anubhav.
Well, talking about Syngene, which is the leading CRDMO player in India, while it has been impacted by inventory adjustment by its key client Zoetis in last few quarters, we believe they are offsetting growth levers around. Now, firstly, a passage of USA Biosecure Act opens up opportunities for Indian CRDMO companies, and we expect that in next 12 to 18 months, there would be strong pickup in inquiries from the biotech firms. Secondly, Syngene has forayed into clinical trials opportunity, which is amongst the biggest sub-segment in terms of market size. Now, in this context, Syngene secured a global phase 3 clinical trial from a USA-based biotech company to start with. Then some of the new biologics facilities are on the verge of becoming available. Now, Unit 3 facility is partially operational. Going forward, management expects this facility to contribute to the bottom line by fiscal year 27. Similarly, Bayview Biologics facility is likely to be operationalized in current quarter. Now, in addition, our company is building a new bioconjugation suite in Bangalore to target manufacturing of antibody drug conjugates. Lastly, valuation is at a significant discount to the peers. At the same time, one should note that last 4 years, gross block has gone up nearly 50%, and some of the facilities should start contributing to the bottom line in the near term.
All right, good time to get in Sachidanand to take her on the market technicals right now. Sachi, we've recovered a fair bit from yesterday's lows. We opened well also, but holding on to the green though off the highs. What should one do? Is it a no trade zone? Are you waiting for some specific levels for either direction calls?
Good morning, Mangalam. Mangalam, I think yesterday's verdict was very significant. We saw
a very strong recovery, and the Nifty again, managed to, give a close above its 200-day exponential moving average support, which is placed somewhere close to around 25,150, 140 thereabout. So I think an occurrence of a spinning top kind of formation near this particular support is a very significant development. But as we see, candlesticks always require a validity in terms of a consecutive closing. So I think going forward, we may see this volatility for next couple of trading sessions. But I think from a trading perspective, now the trend seems to be changing. It's a buy on decline scenario which we are observing. In fact, 25,240, 220 is an ideal zone wherein some long positions can be committed when it comes to Nifty. One can keep a stop loss at 25,160 on closing basis. And during this particular week, or probably in next couple of trading sessions, we may see again Nifty, rebounding towards 25,525 to 25,700.
Okay, all right. There's a possibility that Nifty does see a bigger rebound. Sachin, I missed the stop loss.
Good morning, Nigel. Nigel, I think the level at 25,160 is now very significant. We need a firm closing below this particular level just to, invalidate this particular trade. So I think the stop loss can be placed at 25,160 on closing basis.
Got it. Individual stocks you want to help us out with?
Nigel, I think since yesterday, what we have seen is a good development in some of the pharma stocks. And if you look at the structure of Lupin, which has been very significant, we have already seen very strong relative outperformance. Despite of the volatility in the market, the stock was sustaining above its 5-week exponential moving average support. Now, if you look at the overall data set, it looks like a bullish flag formation in process, and we may see a move towards 2220 on an immediate basis. But if you look at the overall pattern structure, it is indicating a price target somewhere close to around 2280. Hence, we are recommending building fresh long positions in Lupin, keeping a stop loss at 2162 on closing basis. The other stock which has come on our radar is REC Limited. Now, it's a very significant development wherein the stock was in a lower top, low bottom sequence since last 11 months. Now, if you look at the recent development, it has already breached from a declining wedge formation, and the recent consolidation now looks like a bullish pennant on the daily scale. So we are expecting a good rebound in this particular counter, and probably we may see the stock again scaling towards its 200-day exponential moving average, which is placed at around 386. And hence, we are recommending building long positions on decline. One can keep a stop loss at around 358 on closing basis and accumulate the stock for 386 targets.
All right, take that point, Sachi. Thank you so much for that. Your individual stock calls as well as your call on the markets. What we'll do is take a short break, come back on the other side. We have the management of EPAC Durables trading with gains after reporting a steady set of the third quarter numbers. We'll speak to them about the RAC business and the others after this short break. Ajay Singhania joins in.
You want to talk business? Meet me in the On-Board Lounge.
The Nifty holding on with gains of almost 135 points. Look at Bajaj Consumer, 16% higher right now. To my mind, the consumer result of the season so far, 31% revenue growth, 80% plus growth in the profitability, EBITDA doubling, margins improving by over 800 basis points as well. All things in the right direction with the company having valuation comfort as well. That stock continues to surge. But the other one on our radar is consumer durables company EPAC Durable. A decent set of third quarter earnings, largely aided by their small and large domestic appliances and component segment, not so much by the room AC segment, and which is why perhaps the stock has moved off the highs as well. Ajay Singhania joins us now, the CEO of the company. Obviously, we will be discussing the room AC down cycle, whether it's a temporary blip, revenue mix changes from non-room AC business, and revenue as well as the margin guidance for FY26. Let's start with the room AC part of the business, sir. That one saw a bit of a dip while we saw good performance coming in from both large and small domestic appliances. Could you give us a sense on whether this is likely to recover? This is temporary in nature because of the inventory that everyone's sitting on right now because of the weather conditions. What's your growth guidance for the room AC segment over the next couple of quarters? And how does this revenue mix change over the next couple of years?
So good morning. With regards to the room AC industry, we all know that the previous 2 quarters, Q1 and Q2, were highly subdued, and because of the unseasonal rains, there was a huge amount of inventory lying in the trade. Thankfully, after the GST reduction, some bit of movement has started. And then Q3, definitely we saw a huge amount of dumping by the brands in terms of the primary sale, although the October, November, December quarter not being a sales dominant season, but still because of the BE change, the inventories were dumped by the brands to the trade. So currently the trade inventory is slightly elevated. But at the same time, looking at the upcoming season, everybody is very bullish that with a strong set of summer, definitely in the entire industry is going to witness a good summer and recovery from what we have witnessed last year. So AC continues, I mean, despite the headwinds in the last year, the strong tailwind still continues. So the long-term story still remains that the industry is poised on 15 to 20% kind of growth over next 5 to 10 years for sure. So AC is still strong. The industry degrew over the last 9 months, and the same is what is reflected in the numbers of EPAC Durable as well. So for us, the shift from AC to the large domestic and small domestic appliances is a strategic shift. And this is something we have been focusing largely so that we could balance the seasonality in AC and also improve our overall asset turn.
Right. So, Mr. Singhania, you believe that demand will come back, right? Setting you up for a good summer.
Absolutely. So the industry is planning somewhere at 15 to 20% kind of an increase over the financial year 24-25 numbers.
Got it. All right. So let's hope that comes to that. But what about your growth outlook? And I think at the start of this year, the indications were you want to grow at around 35% with margins of around 7.5%. Yes. Now, that's not happened in the first 9 months. Realistically, what do you end the year with in terms of a growth number, if at all? Will it be a flattish number? And given that you're optimistic that demand comes back, very carefully, I would request you to tell us for FY27, what could your growth estimates be, sir?
Okay. So first of all, coming to FY26, so since 9 months already passed on, currently we are looking at almost like a flattish to a marginal growth in revenue, despite the degrowth in AC. So the degrowth in AC could be anywhere between 10 to 15%. So that degrowth has largely been set off by the increase in our small domestic and large domestic appliances, and that both the new and diversification products will continue to grow at a much higher rate. Having said that, on margin side, we continue that 7.5 to 8% kind of margin is a stable margin which the company will deliver and further improve upon in a medium to long-term basis. So on a medium to long-term basis, we intend to keep our AC portfolio anywhere between 55 to 60% of the total contribution, the total revenue, and grow the other two, the small domestic appliances, large domestic appliances and components at a much faster rate. So that's the overall strategy we have in place to balance the seasonality and to improve the asset turn.
Right. And between SDA and LDA, what is more margin accretive for you? What is the mix that is likely to be there?
So between the SD, LD, both some small and domestic appliances again have a very distinct season. So large domestic appliances for us is coolers, and then mainly now we're focusing heavily on the washing machine, which is kind of a Q3 product. So that's a product which goes in July, August, September, and then comes the Diwali season where the small domestic appliances picks up. So overall, we are looking at balancing the each quarter by having the right set of products. And margins per se are not very different. It's only at the gross margin level we see in both the categories, small domestic and large domestic appliances, comparatively better than AC.
Right. What about components and maybe, further capacity additions? At what utilization are you? What's the headroom for growth out here? And the components business, I suppose, could be a margin additive as well, right?
Absolutely, absolutely. So components are much better business to do, although the revenue prospects are less, but then, because it's a small ticket size product, so the margins are comparatively much better even as compared to the small domestic and large domestic appliances. So component is where we have grown multifold in last 2 quarters, and we will continue this growth. We see that we'll continue this growth in component business going forward.
Right. So if we ask you, say, FY27, you presumably grow around 20%, given the AC industry growing at around 15%, that's what you're expecting. And then you have other components which will grow a lot faster. 20% would be a lot more realistic, right? Over a flattish FY26, what does your revenue mix look like in FY27 and what kind of margin should we expect then?
So, like I shared earlier, in medium to short term, we are looking to maintain a 55 to 60% of contribution coming from room ACs, and almost 20% from components and another 20% from small and large domestic appliances.
And margins by the end of FY27 would be what, 7.5 to 9% itself?
Yeah, 8%, around 8% plus minus 0.25 is an average guidance. We believe that definitely will
take that point. Thank you so much for joining in and giving us your outlook. Wish you good luck and perhaps a good summer for your business. A good summer for your business, not necessarily a good summer for our experience, but be that as it may, that's the nature of life.
We want to keep the comfortable season and then improve the comfort of everybody.
Take that point. Thank you so much for joining in. We take a short break, come back on the markets and a lot of stock-specific action. Stay with us.
It's still green on the screen, but we have slipped considerably from the highs of the day. Currently, markets holding at around 25,270. The good news is the breadth of the market is still firmly in favor of the number of stocks advancing. It's been a while since I said something like that. Well, let's go across to Gaurav. He's here to tell us about PNB Housing, which is under pressure post the week showing in Q3 numbers. Gaurav, tell us more.
Yes, if you look at PNB Housing, first let's go through the numbers, what they have reported. Net interest income that increased by 10%, while PPOP increased by 8% because there was some pressure from the OPEX that we saw because of the employee costs that increased in this quarter, and at the same time profits that increased by 8%. It was a bit lower than the street's expectation, but let's also go through some of the factors why the stock is down. There are three key reasons. First is that let's talk about the loan growth number. Now loan growth came in at around 14%, and in fact within that, if you look at retail growth, that came at just 16%. Remember, management was guiding for 17 to 18% of the retail growth. Although they have maintained their guidance, that was the first strike. Second is that if you look at net interest margins, now they have declined almost by 4 basis points, although it is still in that guided range of 3.6 to 3.7%. This quarter, street was not expecting net interest margins to decline. Management said that there will be some pressure going ahead as well in the likes of 10 to 12 basis points in terms of yield on advances, and that is the reason why, although they have maintained the guidance, there was some bearish comment there as well. Other than that, they are saying that if you look at the disbursement growth, now that came in at around 15.6% on a year-on-year basis. This was the biggest disappointment, and the reason being, if you look at the disbursement specifically in the affordable segment, that came down almost by 15%. This was a negative surprise for the market because given that the company is actually focusing more on the affordable segment, in fact, they also said that the affordable segment is going to get impacted. Not going ahead, but in this quarter specifically, it was impacted because of the Tamil Nadu issue and the governance issue that we have seen from that region. Going ahead, they are confident on bringing back that growth. In fact, they're also saying that this portfolio will be 40 to 45% of their overall portfolio versus what it is right now at 39%. There are some concerns around ROAs as well. Now, going ahead, management says that ROA is going to be in the range of 2.6 to 2.7%, but three key points. First is net interest margins, where they are seeing some kind of pressure. Second is that some kind of setback that we have seen from the affordable housing segment. And third is the credit cost. Now, in this quarter, in fact, in this year, they're expecting credit cost to remain negative, but in FY27, it will come back to the normalized level of 20 basis points. And the street is concerned that to achieve that stabilized ROA of 2.6 to 2.7%, there are many levers that the company will have to move. And that is the reason, if you look at the stock performance, it is currently under pressure.
you.